This chapter is about budget planning, and there are 3 concept videos that constitute the learning objectives of this chapter. The first video, we're going to look at identifying the benefits of budgeting and the essentials of effective budgeting, and we introduce what's called the master budget. Now, first of all, the length of the budget period. Now, businesses prepare the budget for the whole year. They'll break it down into months or quarters, and so that some businesses even budget by the week. But it's long enough so that you know where you're going in the coming year. The budget process itself begins many months before the beginning of the year. If we're talking the budget for 2013 at a university, it was planned back in August or September of that year. We collect a lot of information. We look at last year's budget and we add additional information to it. Now, it all starts with the sales forecast. This is so important, particularly for industry. Everything hangs on what the marketing department says that they think will be sold by month throughout the next year. So it's very important that the business understands the general economic conditions for the coming year, the trends. Businesses will do market research studies, look at price change, all kinds of factors that go into developing a good sales forecast. Now, we're introducing the idea of a master budget. The master budget is just a combination of all other budgets and how they are interrelated. Now, there are 2 types of budgets, 2 classes of them. We're going to focus mostly on operating budgets. These are the sales budgets and the production budgets, purchasing of material, hiring of direct labor, the management of manufacturing overhead. The other budget is called a financial budget, and that is some long-term budgets like capital expenditure budget. But in this course, we're only looking at the cash budget and how it is used to forecast the cash needs for the coming year. The components of a master budget, as it says, it starts with the sales budget. Now, the master budget is the name for all of these budgets. So we're going to look at the sales budget in this video. In the next video, we're going to look at the production budget, direct material manufacturing overhead budget, and the selling and admin budget. And then lastly, in the last concept video, we'll look at the cash budget. As we said earlier, it all starts with the sales budget. It's so important that we get the estimate of sales revenue as accurate as we possibly can. And the budget everything depends on the sales budget. For example, in this case with Hayes Company, the expected sales volume is 3,000 units in the first quarter. So you can see the budget is done by quarters, 1, 2, 3, and 4. 3,000 in the first quarter. We add 500 units. They think they're going to sell 500 more in quarter 2, another 500 more in quarter 3, another one in quarter 4. The sales price for our unit is 60 dirhams or $60, and therefore we simply multiply the number of units by the $60 to come up with the sales forecast for the coming year.